looks, I'm taking this off the website, so no apparent order, just the way it breaks down. Is Charlie Fisher here? Joe, is it Greco or Greco?
Greco.
Greco. I knew I was getting that wrong.
Close enough.
I get a lot of that with T-Burpa too. Baez Aravalo? Again,
Yes.
butchering the name. Juan. Oh, hello.
Hello.
We missed you last time. Kate Denizen, I can see.
Yep. Erin, do you prefer if we're on camera or off, or does it not matter to you?
It doesn't matter a whole lot to me. So whatever you guys are more comfortable with, we'll go with that. Lauren Naldoza, are you here?
Hi, yes, I just joined.
Oh, good. Great timing. And Lucia Maddox, which I'm probably not pronouncing as well as I should be. And I know Mr. Marquis was not going to make it. He's apparently flying off. Is Mike Pierce here?
Oh, sorry, my phone was muted. Yes, I am here.
Oh, excellent. Scott Buchanan? And do we have Tim Martinez? Will Schaffner? And Winston Berkman-Breen?
Yes, I'm here.
Okay. Okay. Now I feel more comfortable because we've got a quorum. So I hope everybody got to take a look at the draft, the revised draft that got sent out, with the new elements being, a provision so that if NMLS hasn't caught up with the requirements, and I know that they're behind on a little bit of it, that they submit information to the division via a form on our website is basically what the form and manner breaks down to. The biggest new parts, I think, so there's the annual reporting. And there was, when I first drafted these in the order they were drafted in, there was a lot of confusion internally on what it is that we're getting at. And I want to make sure that it's clear to the RAC. So the annual reporting was a breakdown of the portfolio, and that's going to be used for the assessment. So we did the fiscal study to determine what we needed to support the program, how much we needed to support the program, and then what that would break down for licensing fees between the, assuming tops 35 student loan servicers. And that kind of came out of the last meeting, just an estimate on looking at nationwide. We're likely to have right around there, not very many more. And so that bumped up the individual licensing and renewal fees beyond what we thought was tenable, particularly if we've got a majority of kind of, a set universe of big players and then some smattering of some smaller players. We didn't want to make it a barrier to entry for the licensing, because you have to be licensed under the bill. And so the only way for us to kind of work that out and make it more equitable between those companies that have more of the share of the market and therefore would kind of demand more of the division's attention, although based on the conversation last time, it doesn't sound like this is a really volatile area with a lot of need for intense supervision because of the large market and rampant abuses. It sounds like a lot of that has really kind of been addressed one place or another. So my biggest concern, and the thing that I really wanted to talk with the committee about, is that right now there's sort of 3 different due dates covered in the rules. Or maybe even 4. The licenses by the bill expire on December 31st. the annual reporting is due August 1st, and that's in order for the division to process that information and turn it into the assessment, which is due October 31st. And we wanted the October 31st to make sure that we had the payment of fees in place prior to renewal, so that it wasn't a matter of fees getting missed and then they get renewed anyway because we haven't caught up with that information. And then there's when if you scroll down to it's page 6, 441-895-0075, there's the annual financial statements, and that could potentially be a third, or have we gotten to 4 now, deadline that licensees would need to pay attention to, because it's the fiscal report or financial statement would be due within 90 days after the end of the fiscal year. We tried to align the dates as we could, but the annual financial statement, which was really kind of the one that we could have put either with the reporting or with the we didn't want it at renewal because that's a whole lot of information to look in, and things get overlooked. And when we found in the past, when we overlook financial statements, that we won't really recognize a licensee with a problem that we could have worked with them until it's too late. And so we wanted that prior to renewal. But NMLS has a function wherein you can submit reports through NMLS if it's 90 days, if it's within 90 days of the fiscal year, at the end of the fiscal year. And so, and this is proposed language, but the proposal is that it would likely be easier on licensees to meet multiple different deadlines if, at least with regard to the annual financial statement, it was just one and done through the NMLS. And so that's why we've got all of those different dates in there. And I wanted to make sure that we had a discussion about that was, tenable and workable for folks. Because I know, as we were drafting these kind of things and saying, well, we need this now, but we need this then, but we'll have to do this here. It started to look like a whole lot of kind of independent bureaucratic requirements that we don't want to be a hardship to lenders. We want to be able to make it as easy as possible to comply with the deadlines, but we also have certain deadlines of our own. So that's my spiel on those. Anyone have a take on it or thoughts on how that's worked out, or those particular provisions? Those are really pretty much the only new ones in the draft that weren't actually discussed at the last meeting.
It's Joe Greco at College Ave. The only comment I'll make on the financial statements, and this might be just a function of NMLS, but I can never fully understand it, but when the fiscal year ends at the end of December, it does take just about every company I know of about 90 days to put together those reports. So there's really not a whole lot of wiggle room. If that number was 120 days, then that would almost give you 30 days to submit the report. But putting it right at 90, it's always, and again, I'm not saying this would be your state would be unique, but it's really the report gets completely finalized, and it's like by the next day we've got to get it uploaded, because we don't really have 90 days. It really takes that long to get everything finalized and audited. So for whatever that's worth.
Thank you. I'll I don't know. Is it worth sacrificing the ability to just submit it once through NMLS in order to have more time for submitting the reports, do you think?
That being said, I do think, since we already do have to get it into NMLS, from that perspective, it might actually just be easier to leave it. So I think, unless anyone else has a different opinion, so I might just sit on my own opinion on that. So.
It's good to voice it, though. Maybe, if enough times it gets voiced to the NMLS, we can push that out a little bit so it's a more reasonable date for everybody. And hope springs eternal. Anyone else want to jump in on that? Or anything for that matter? Not hearing anything, but there's always the possibility of mute. I keep
Karen,
trying
I'll
to
go
use my.
again. I'll go
Okay.
again if no one else does. I did see as far as the annual assessments and it being a proportion of the servicing activity. I would say from the industry perspective, although I understand the argument of the barrier entry for the smaller participants, it sometimes is just easier if it's kind of a more known or predictable amount from year to year. So again, not knowing, if, for example, if another servicer happens to transfer their loans to a different entity like a bank or something like that, my assessment then might go up year over year, even though my population of loans hasn't changed that much. So while I get it on the smaller side, there's also, I think, something to be said sometimes to know that having a predictable amount baked in, knowing that, again, from an industry perspective, that our margins are thin, and being able to have predictable payment amounts versus ones that could change year over year, even though our base may not change much, it just introduces some unpredictability for us. But at the same time, I understand the logic as to why you guys came up with that. So, but just putting that opinion out there.
And I don't have a lot of experience with assessments. I know that we do it in the banking arena, and we do it, I think, to some extent on the insurance side. So I don't even know from year to year. From year to year, our costs would be the same, but as you say, it lacks predictability for the servicers at a certain point. Thank you. Anybody else have anything on either assessments or financial statements? Again, I'm not seeing any hands, but sometimes Karen, can you take it back to, oh wait, I'll go annual, we've got annual reporting, fees paid. I'm not sure if we discussed licensing. We didn't know what the licensing fees were going to be the last time we met, because we hadn't done that fee study yet. And so it looks like, and bringing us right around the middle of the pack with regard to the other states that have licensing requirements, it's 1,000 plus 500 for renewal.
What page is that on?
Sorry, that's on page 4.
Okay.
It is 45, 0045.
Okay.
Yep.
Right there?
Yeah, that's the one.
Okay.
So that was basically filling in those numbers. The license and the branch. And then the annual reporting. And then the assessment language is after that. And I think we had talked that it was easier or to go with the number of borrowers as opposed to the number of loans, because on average, each borrower had between 2 and 4 loans, somewhere panning out around 3. And so that the assessment language should take that into consideration. I'm still looking for hands or folks who are looking angrier and angrier with me. So far, since I don't see many folks, it's not so bad. And then, so the new language on the annual financial statements, the duties of a servicer of a student loan, and then we added new language based on our last meeting with regards to engaging, so the things that you're not supposed to do is engage in unfair, deceptive, or abusive practices as prohibited by the Consumer Financial Protection Act of this act.
Thanks.
does.
Thanks for doing. This is Mike Pierce at SVPC. Thanks for doing that. I think that's really good and a very helpful addition.
The Department of
Absolutely.
Justice echoes that sentiment. We really appreciate the addition.
I'm glad it's a good addition. So then I think, aside from fixing a whole bunch of my random capitalization, which I have historically had a problem with, I think that's pretty much all the new language. As a whole, and there's the comments about, it's the 90 days is not really very much time, but that said, keeping with the uniformity is a good thing. And then again, the loss of predictability with the assessment being not ideal. Are there any other comments about the rules or the structure in general? Is it things that are missing, oversights, unclear provisions? And this is not the last time anybody gets to weigh in on it. But if there's something I can fix before we notice it for hearing, I always like that rather than having to cop to things I didn't see and mistakes I made after a hearing.
Okay. Erin, I can say, this is Kate from the Department of Justice. I can say that I had our staff in our consumer protection section who specializes in this area take a very close look, and she thought that the rules were very well done and that they captured the spirit of the law. And so that would be our feedback.
Thank you. Anyone else? I see.
Erin.
Yeah. Hi, Shelley.
Hi. I just want to make sure I'm tracking it correctly on the fees. So the first assessment will be due this year by October 31, based on information that they submit when they initially license. The first license fee will be due July 1. Is that correct?
Upon licensure. So.
Okay. And then it'll be due again. So the first license fee will not be for a full year. It will be due again. They'll renew at the end of the year. Correct.
Correct.
Okay.
And I guess the thing that I find that kind of balances the half-year payment is that the assessment will kind of that'll impact the assessment because they will have been paid a full license fee, and so hopefully that makes for a slightly more reasonable assessment, theoretically. Nice. Thank you for the comment with regard to.
And one more comment,
yes.
sorry.
Yeah.
And honestly, not knowing if we're going to get 35, we're just estimating, but if that's a lower number, that'll bump that assessment up. So.
Well, unless there's other specific comments, then I would shift us toward the statement of need and statement of need and fiscal impact worksheet that I sent out yesterday. This is part of the process that we're required to go through. Just making sure that we've thought about, it used to be just the fiscal impact of the rules, and now it's also the equitable impact of the rules. And I have to admit that this is the first year we've done the equity statement, and so I don't have 14 years of experience doing that type of statement. The fiscal statements, you kind of work into a routine and a formula after a while. But I have to admit, struggling with the equity statement, because when I'm looking at the rules, what I'm looking at is a licensing for a particular type of service, and that while, you know, Senate Bill 485 may have been passed in order to combat particular abuses that were seen within the industry, the rules itself shouldn't have a sort of a disparate impact. I think that's true of any rules. You shouldn't have a disparate impact. But knowing that intentions aside, disparate impacts exist simply because of how the system, and you know, the larger system has been structured, and you know, the various pieces and elements that come into just being a person or a business in the larger society. There are always differences in how regulations impact individuals. But again, when I come back to a statement with regard to these particular rules, you know, have we considered the impact of these rules within a system that maybe is not starting off on the same level? I definitely need help with that area. So if there's, I had drafted, thank you, Karen, for putting that up, in the yellow.
Yeah.
That's kind of our new language that we've got to fill in. And so it's, you know, they largely impact student loan servicers. They should, because we're not dealing with the ombudsman position in these rules. This is just straight up licensing and requirements under licensing. That, you know, the student loan servicers are going to be most impacted by these because they're the ones that are, you know, that the rules are directed at. And then the kind of going from that, the regulation of student servicers imposed by Senate Bill 485 is likely to have a positive impact on individuals with student loans. I know that there's demographic information with regard to who has student loans, but I don't know specifically if there are disparate impacts with regard to those who have student loans, you know, in relation to or because of servicing relationships or relationships with the universities. I don't have that data.
I just
so,
dropped a link to a paper in the chat that talks about the nexus between student loan servicing and disparate outcomes for student loan borrowers. I have some more research that we can pass along to, but we've written a whole bunch about this.
Thank you.
But I should just say, as a baseline, though, it's wonderful to see you talk about racial disparities and the effects on borrowers in the equity statement, as opposed to just focusing on the absence of businesses owned by protected classes. So thank you for doing that.
Oh, absolutely. I kind of think it'd be negligent of me not to. So thank you for the support on that one. I would, you know, I'll look at the research that you sent, and unless any of you or all of you have specific comments or feedback that you'd like to give me now on it, I'll kind of try and see what I can do to flush it out to a point where it seems adequate to, you know, the folks that I report to. And then I'll send it back to you prior to filing, because we should have a few days anyway before we need to file these. I think we're not filing it until 5/1. 5 is May. Is that right? Yeah, Karen?
Yeah, that sounds good. I was going to say on the racial equity statement, how it affects a community can be either positive or negative. And so we have to look at it both ways. And and that's, like you said, that's just the rules that we're implementing.
There's another hand up someplace.
I think I need to take mine down.
Oh, maybe it's just you.
Yeah, I think so.
Can you scroll a little bit so we can kind of revisit visit the fiscal and economic impact? I know I got this to you guys kind of late yesterday, so I want to make sure that we've got a chance to discuss it, because this is one of those parts where I need the input of the committee. That's a specific question that we get, and it's in terms of procedure, very important, because if I can just take guesses and throw stuff in, but that is imminently challengeable. If somebody decides that if they don't like the rules, they can use that to come and say these are invalid rules because you didn't run any of this through your rules advisory committee. So I'm running it through you, A, because I value your feedback, and B, because I hate it when my rules are turned over on procedural things. It happened once. And it was a year after the rules were filed, so I'm still holding a grudge. Anyway, so if you have had a chance to go through this and have thoughts, that's great. We can walk through it now as well. In general, what it's kind of couched at, and this is sort of typical for rules that come because of legislation, is that the point of the fiscal and economic impact is the rules. And when you've got legislation that says do this, we have a lot less wiggle room with regard to what that fiscal impact looks like and how we can moderate it. And so the licensing, the licensing rules itself, as as I see it, and I could be, likely overlooking things, is the assessment is a fiscal impact that is solely due to the rules. The licensing and renewal fees are solely due to the rules, even though the requirement for the licensing is because of the bill. And then the requirement for a bond, because we have set it at a $30,000 bond, that particular element will be because of the rules. But again, Senate Bill 485 requires the bond. And so it's sort of a split fiscal between the bill and our given rules. And that should largely boil down to what it says. Because there's no licensing regime, we don't really know exactly how these rules will impact any given licensee. So any information you have with regard to that is infinitely valuable. We can guesstimate that it's going to cost them $1,000 and $500 per branch, and however much it costs to get the bond, and then whatever the assessment breaks down to. But with regard to the impact on the state agencies and local government, I think this is only going to impact DCBS because we're responsible for administering and enforcing the program. So we don't see any particular impact outside of that. I'm not sure it's very well spelled out, but we tend to feel that NMLS lessens the fiscal impact with regard to the agency and also with regard to licensees. Because you can submit one thing and it goes to multiple states, and then for us, it's going through a database where we don't have to have individual databases that are keyed for particular things that keep us. We have people, person assigned to this. They go onto the NMLS and be able communicate through that instead of various emails and whatnot. So. I was unable to estimate the number of small businesses that would be impacted by the rule. So ORS 183336 defines small business as 50 or fewer employees. And I thought, given the conversation that we had last time, it was fairly unlikely that we'd get a student loan servicer that actually had 50 employees or less, but I don't know. Since we don't know who's servicing loans in the state, I don't really have any way of looking out and saying, oh, look, they only have 25. So if there is anyone who knows or has information with regard to a student loan servicer that has 50 or fewer, that would be excellent information for me to be able to put into the number of small businesses and the cost of compliance for those small businesses. I had, I was looking up and I'm trying to figure out how many states have student loan servicer regulations. It looked like as of last year, it was 13, but I'm not 100% certain of those numbers. Does anybody have a better number for me, or? Then 13 it is.
There are also, I assume not counted in that 13 is Maryland, which has a unusually crafted debt collection licensing scheme that captures student loan servicing as debt collection in Maryland, because Maryland's debt collection licensing scheme includes pre-default collection activity.
Oh, okay. Thank you. No, I don't think that does include Maryland. I'd be surprised if it did, honestly. So I appreciate that. So I'll change that
Sure.
to 14. And I wasn't sure, and I'm having a difficult time kind of piecing out whether or not all of those states use the NMLS or just a majority. And so I think I used hedgy language with regard to NMLS usage. Largely, yeah. So I have 13 states regulated student loan servicers largely through the nationwide NMLS. I don't know if that is, I figure largely is accurate. If there is more accurate information, then I'm absolutely dying to put it in here rather than my hedgy language. And so looking at the cost of compliance and effects, and this is going to be the cost of compliance for anybody. The NMLS charges a $100 registration fee. There's the fiscal impact due to licensing and renewal, the assessment, the bond, or the irrevocable letter of credit. Those are going to be, as far as we can tell, the major impacts. We can't really gauge specifically what that breaks down to in a number because we've never done this before. We don't have a frame of reference for it. So the projected reporting and other administrative costs. I think maybe this would be a good place for me to add a bit about the predictability element that you lose with regard to an assessment, so that when we're looking at what the costs are and how this is going to impact, this statement is supposed to put people on notice of what's going on with the rules. And so I think it would be fair, and I'll take a show of heads or text support or no, this is not a good idea, to put the kind of the downside of an assessment into the projected reporting and record keeping, because it's not going to be as predictable, and that is going to be impact for licensees. Does that sound fair in terms of fleshing that part out? Joe, I'm looking at you. Okay. Thanks.
Yeah, I think that's okay.
Okay. And then when you go down to equipment and supplies, I don't think that there's going to be any particular new equipment and supplies just because Oregon jumps into this. But we don't know. And so I've got my hedgy language in there that we just don't know the exact impact because we've never done this before. Small businesses, we try very hard to make sure that we've got small businesses and small business interests represented on our rule advisory committees. That's, again, when you're looking at something that's 50 employees or less, I just didn't even know where to look with regard to that in this rule. So I don't actually think that small businesses are specifically included on this rule advisory committee. If someone wanted to say, no, I'm here, I'm looking out for small businesses, I'd love to see a show of hands. But I think it sounded from previous meetings and from what little I know about the industry that that's just not really the types of players that you get, is the 50 or fewer. While there may be some, yeah, I don't know who they are. Well, until I get edited by those above me, that's going to stick to be my small business statement on it. And then if you can scroll to the next page, Karen. Here's again where we are asked to look at the equity, look at the rules through an equity lens and what types of representation or folks that have I'm going to say that have a focus with regard to underrepresented or largely overlooked or minority populations. And that can be seniors, it can be persons of color, it can be women, it can be LGBTQ, it's very broad. low income neighborhoods even that generally don't get paid particular attention to. So I really kind of took just a general stab, and then as I was writing it, I felt like I was leaving out individuals that, by asserting that the Center for, for Responsible Lending, and I'm taking this off of your mission statement on your webpage, that the existing financial underserved for the existing financial market, and then neighborhood partnerships, which I know is also a part of the Stop the Debt Trap, which is sort of a larger coalition of groups. OSPERG, who works kind of generally throughout the state to make sure that you've got a person speaking out for the general public. And as I was trying to draft these, I'm feeling really uncomfortable because I am actually speaking for these particular organizations who would probably, it would be certainly easier for me if you all would send me some sort of email or something that says, yes, we're looking at, we're representing the interests and persons of community likely to be affected by the rule. Again, since this is student loan servicers who are likely to be impacted by the rule, it's a little awkward, but I think it's reasonable to expand it with regard to the rule imposes, specific administration over a business type. And so looking at benefits of regulating that particular business type to given populations, I think is probably fair play. I'm hoping so. Like I said, this is the first time we've done one of these equity statements. It's a brand new requirement for us. So I'm going to ask all of you if you can kind of look at the language there, whether or not the membership of the RAC represents the interests of persons and communities likely to be affected by the rule, with sort of a broader take on the rule to include also, to some extent, Senate Bill 485, where the regulation actually occurred. We're just manifesting it. We're just giving details. And just a sentence or two on how it is that your individual membership on the committee speaks to that particular requirement. That would be wonderful for me. So that way I don't have to kind of, and I'm not not making it up as I go along. I have access to your mission statements and who you all represent, but I feel it's inadequate for me to impose what I think you represent with regard to the outlook, the broader outlook with these rules. And I think it's probably more accurate for you all to tell me who you believe you represent, or who all comes under your umbrella as stakeholders. And I figure that's probably pretty broad for all of you, the servicers included. I'm sure almost everybody here has some sort of equity built into either their mission statement or their overall policies and function, at least at this point. So I felt like I was leaving people out without actually knowing it, how that breaks down into who you all see as your stakeholders. That was really long and rambling, but this is the first time I've done this one. So is everybody okay with that if I ask for a sentence from you all that kind of answers that particular question?
I'm happy to include one from SBPC too. We certainly advocate on behalf of all people with student debt who are disproportionately women and disproportionately people of color.
Thank you. I really appreciate that.
This is Lauren Aldoza from Neighborhood Partnerships. I know Charlie from OSPERG is not here today, so I'll just relay that request over to him and we can just get some sort of language over to you. But I think for the purposes of this, I think at least for what you wrote down for Neighborhood Partnerships, we're totally comfortable with that, but we will get back to you.
Okay, thank you. Yeah, I did some cutting and pasting last night. So we still have a lot of time left, which I'm not gonna make you sit and listen to my lame jokes and talk about my new dog and how that's a bad idea to adopt when you're not actually on some sort of vacation. would it work for everybody if I kind of let you all sit with the documents that I sent out yesterday, which is the rule with the language? And then in particular, from the committee, I really need information with regard to the fiscal and how accurate you think it is, or if there are specific numbers that would be useful. Like this is going to cost, you know, an estimate of, so the last rules that I did that talked about consultants that they would need to bring in order to make new policies that were required by the rules. I don't see new policies so much in these rules, but I also don't know if there's going to be any sort of need for outside assistance. I think since Oregon's not the first, I'm guessing this is all really set up and basically it's just one more state, you know, charging you money, but I don't know specifically. So any input with regard to that, or even just a quick email saying, you know, I can't think of anything else. This seems reasonable. And then we'll stash that in the file to make sure that we've done our due diligence with regard to the fiscal. And then also with the equity, if y'all could send me just a little note with regard to answering the question about representing the interests of persons in community likely to be impacted by the rules. And I think that can be broad. Then unless there was anything else that you all wanted to go over in this particular meeting, I would kind of roll us through next steps, and then I would release us to the wild. And now that I have 2 dogs and 3 cats, my house is getting a lot wilder. I don't see anything, but I also don't know if people are on mute. Actually, I can see people on mute. I just don't know if they're talking. Okay. Karen, did you have something?
Yeah. Did you want to go through the timeline then?
Yes.
I think we're on track. Yeah. We are on track. So I'm the rules coordinator and I do the technical side of rulemaking. So I think, as Erin said, we will be filing the notice of proposed rulemaking at the end of April. The hearing then would be scheduled for May 22nd or whatever, however that date works. And then we would file the permanent rules at the end of June for an effective date of July 1st. And I think that's the date that we have to have these in place by.
Yeah. So the earliest we could file would be May. Yes, at this point, because we'd need to have it by the 1st of the year or 1st of the month in order for it to make the bulletin, in order to kick off the 20 some odd days.
Yeah, for me, my terminology is a little bit different than yours. So I would file the notice at the end of April to reach the May 1st bulletin, which is what tells the world we're proposing these rules. The hearing is going to be May such and such. So that's the earliest.
I want to make sure that we're being able to communicate with the folks who will need to be licensed shortly after the rules become effective.
Okay.
So we'll need to internally make sure that we do a broad blast of information and have them out there. So cool, thank you. And so when it goes to when we file the notice for hearing is also an opportunity for comment. So if you know, I'll send out a request for information with regard to how y'all feel about the fiscal and equity statement. And then when I get that back, that'll be what we use to file the rules. And then once they're filed, that opens up the comment period again for for you all and for the public in general. And then that will ultimately determine what the administrator adopts in the end, which I'm guessing with all of the all of the back and forth with regard to these rules, they'll probably look identical, if not, if there's issues that pop up, I'm absolutely happy to change them, but very close to what they are now. And so we'll start communicating that so that we're not catching people unawares. Fair enough? Okay. Thank you all so very much. I will send out an email immediately after, because as it turns out, my schedule is clear for another half hour. Yeah, if you have any questions, if you have any comments or concerns, please feel free to reach out. Otherwise, it has been an absolute pleasure, and thank you so much for all your assistance on this. And I hope you have a wonderful, wonderful afternoon and weekend and all the rest of that. Thank you.